Miningscout ist auf der Mainz & Money Messe in London auf der Suche nach interessanten Gesprächspartnern und interessanten Stories von Unternehmen. Wir haben heute zu Besuch bei uns Belkin, einen international angesehenen Marktstrategen für die Finanzpolitik, seinerseits tätig für Hedgefonds und große Bankenhäuser. Und er wird uns heute ein wenig über seine Strategien des Marktes sagen, wie er sie aus seiner Sicht sieht. Michael, thanks for joining us and thank you for taking time for an interview. And please give us a short introduction of your person and what is Belkin report.
Okay, my background was at Salomon Brothers. I was in proprietary trading. I have a forecasting model that gives directions for markets and sectors and groups and stocks. And I advise large hedge funds, investment banks, mutual funds, etc. And so I've been on a trip around Europe, visiting my clients in Milan, and Lugano, Zurich, and now in London.
Oh, that's fine. That leads me to my first question. We are living at the moment in an absolutely downturn of the shares. Every share price is cheap as never before. Is it the right moment to buy, or should we stand by side with the money and wait for better times?
Well, the gold stocks are severely depressed, and I think it's really an exceptional buying opportunity. The regular stock market is the opposite. I think that it's in a bubble. So basically, gold is negatively correlated. The gold stocks and the gold price have been going down while the stock market has been going up. And I think it's a result of what the central bank is doing. The Federal Reserve has been printing money and quantitative easing. And so to make a long story short, the XAU gold stock index is below the level it was 30 years ago. 30 years ago.
That's impressive.
Yeah, so I mean, what else? How many other assets do you know that you could buy below the level they were 30 years ago? And many of the gold stocks are down 80, 90%. So I think it's a good time to step up to the plate and buy very depressed gold stocks that are negatively correlated to the market. I expect the stock market to trade down and gold stocks and the gold price to trade up.
And what can we expect in the near future from the precious metals?
Well, I think what's happening, you have to think of it in a global context. And so the economic expansion is now 54 months old in the U.S. So it's approaching 4 or 5 years. It's between 4 and 5 years. The average expansion is 45 months. So we're a year over the average expansion. Stocks trade down during recessions. The Dow Jones has declined by an average 31% over the course of recessions, going back in every recession, it has declined since 1902. So in the context of a downturn in global equity prices led by emerging markets, gold and gold equities stand out as being the mirror image, the opposite. So whereas everything else is in a bubble pretty much, and emerging markets are already trading down significantly. Indonesia is down 35% from its peak. So all the theme about global investing was you're supposed to invest for the boom in China, and you're supposed to invest in resource stocks that for base metals. That is discredited and over with. So I think we're going down in the economy for the next year or two, and so gold. I'm not bullish on everything else, but I am bullish on gold and gold equities.
Yes, and can we see the same situation in the base metals also?
Not really. So base metals are sensitive to the economy. And I think the economy is headed down. Auto production, I think we're at a peak. Auto sales. So when the economy trades down, I think that base metals have downside risk. So I see on a 30% downside average risk in metals like copper, tin, aluminum, nickel, zinc. But precious metals are different. They are a monetary asset, and I think that they are negatively correlated to the market, which means they do the opposite of what the market does, the stock market. So the stock market goes up, gold goes down, stock market goes down in the future, gold goes up.
Okay, that's interesting side of the things. We have talked about the share prices fallen so much for some companies, often over 90% from their height in 2010 and 2011.
Yes.
Are there any companies you would prefer to buy now what are your favorites?
Yes, I have 9 stocks that are down at least 80, 90%. I'll run them off real quick here. KGC, Kinross Gold, down 82%. These are from the 2011 peak. Nova Gold, NG, down 89%. Buenaventura, largest precious metals mining company in Peru, down 78%, symbol BVN. Orico, symbol AUQ, down 79%. Asanko, down 77%, AKG. Samafo, down 80%, SMF in Toronto. Pan American Silver, PAAS, down 75%. Allied Nevada, down 92%, symbol ANV. And last but not least, International Tower Hill Mines, down 96%, THM.
That's impressive. Okay, Michael, thanks for this short interview. I hope the readers will enjoy what you have to say to them, and I wish you good luck and enjoy the show.
Thank you very much.